Hey everyone, Microsoft reported quarterly financial results after the markets closed on Tuesday, July 30th, and that sent the stock price down over 4%. And I'll review those financial results and I'll highlight the reasons why Microsoft stock is down. And then I'll update my buy recommendation for Microsoft stock. I'll let you know if after these earnings results, if this is a buy on the dip. Remember, coming into this quarter, I did have Microsoft stock rated as a buy. I've had Microsoft stock rated as a buy all year long, and I'll let you know if I'm keeping it there following this update. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Microsoft reported $64.7 billion in revenue in its fiscal year 2024 fourth quarter. And that was good for growth of 15% year over year. Now, the company generates excellent profitability, and its gross profit margin was 70%, although it was down by 1% year over year. That's one reason why investors were not so thrilled about Microsoft results. Now, you might be thinking a 1% decrease is not all that much, and I would agree with you. But given the rally in AI stocks and large cap tech stocks in 2024, investors may be extra cautious here and may be looking for a reason to sell Microsoft stock, to take profits and sell Microsoft stock. Also, investors are a little bit impatient in terms of the development in artificial intelligence. Companies like Microsoft have been spending billions and billions of dollars investing in artificial intelligence, and investors want to see results from those investments. They are impatient with the growing costs and decreasing profit margins as a result of these AI investments. And so when there are signs, like we see here, very, very small signs that Microsoft's profitability is being impacted by these AI investments, some people tend to head for the exits. Still, the company generated great profit. Operating income came in at $27.9 billion, which was up by 15% year over year, and its operating profit margin stayed flat at 43%. Remember, an operating profit margin of 43% is really, really strong. Any company, I shouldn't say any company, because there are some companies that have profit margins in excess of 60%, but those are few. Most companies would envy a profit margin over 40%, an operating profit margin over 40%. Microsoft is a lucrative business, generates strong profitability, which was demonstrated again in its latest quarter. Commercial bookings growth increased by 17% year over year in the fourth quarter. Here's another area of slight disappointment from investors who were expecting acceleration in this category. Remember, in the previous quarter, commercial bookings growth jumped by 29%, and then now it falls back down to 17%. Investors were hoping Microsoft could deliver these elevated levels of commercial booking growth. Still, if you look at their commercial remaining performance obligations, that jumped by $34 billion from the previous quarter up to $269 billion. These commercial remaining performance obligations are contracts that Microsoft has signed with customers that will eventually turn into revenue. Microsoft Cloud revenue was another area of focus. The company reported $36.8 billion in cloud revenue, which was good enough for growth of 21% year over year. And this number also was a little bit disappointing given that they've now decelerated this category. It grew 24% in Q1 2024, then 24% again in Q2 2024, then down to 23%, and now down to 21% growth. So you're seeing a sort of deceleration in cloud revenue growth from Microsoft when the category overall, the cloud segment, is re-accelerating, as I noticed from results from Amazon in its previous quarter and Alphabet in its most recent quarter. Both reported accelerating growth in the cloud segment. Now, capital expenditure has been an area of extreme focus from investors, given that Microsoft and other large-scale cloud providers are spending aggressively in building out their AI data centers. and CapEx came in at $19 billion for Microsoft in the latest quarter. This is compared to roughly $13 billion for Alphabet in its latest quarter, and they forecasted that they will continue spending to build out their AI capabilities. And this is where you have that mismatch where these capital investments are going in right now to build out the data centers and AI capabilities, the AI factories, but they're not going to generate the return on that investment maybe until next year or longer. So at least 1 to 2 years before they're going to start to reap the benefits of these investments. And investors are growing impatient with companies like Microsoft and Alphabet for that matter. Remember, a couple of days ago or a week ago, Alphabet reported quarterly earnings results that were also mostly solid, but the stock price fell following the release. And one area of concern was Alphabet's continued investments in artificial intelligence and the $13 billion in capital expenditure. And the similar story here with Microsoft, where overall the company's numbers look pretty strong, and yet the stock price is down 4% following the earnings release. Now, one area of recent strength for Microsoft has been in the Windows original equipment manufacturers. These are sales of personal computers. Microsoft has returned to growth. Remember, in the fourth quarter of 2023, this segment, Windows OEM revenue, declined by 12% and then returned to growth here in 2024 and closed the year out with another quarter of 4% year-over-year growth, although that was a deceleration from the previous 2 quarters where it increased by 11% in both quarters. So a deceleration of 4% was a little bit disappointing for investors. Still, I think the growth in personal computers and Windows sales will accelerate again in Microsoft's fiscal year 2025 as folks replace some of the computers they purchased in 2020 and 2021. And this trend will only increase throughout 25 and then into 2026. So overall, a solid quarter from Microsoft, and yet the stock price is down over 4% following the release. And I highlighted some of the areas that were not great. I mean, they weren't bad, but the only thing was that they weren't great. And so investors may have been expecting a lot from Microsoft in the quarter. They were expecting it to outperform significantly with robust numbers in anything related to artificial intelligence. And I think we didn't see that. We saw solid growth from Microsoft, but we didn't see robust numbers, especially in the cloud segment, which grew at 21%, which I think investors were expecting more from Microsoft in that segment. Still, I think the company is an excellent business longer term. It's selling at a forward price to earnings of 27 now. Following these recent declines, investors can get Microsoft stock at a much better valuation. Now, I've had Microsoft stock as rated as a buy, as you can see here from my stock recommendation list. And I last updated this on April 25th. And today I'll reiterate my buy recommendation. I like Microsoft stock even more at the current valuation today than I did a couple of months ago when I last updated this recommendation. So I think investors are getting a good bargain here, a good deal for Microsoft stock at current valuations. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.